Hey there, mushroom traders and investors. So last weekend I put out a public video and surprisingly 5,200 people watched it, and it was twice as many people as the US marijuana sector video, and that surprised me. So if you keep up the likes and views and shares and all that, I'll keep putting out the content. Let's look at the charts. Chartguys.com. Become a confident, effective, and informed trader. Join our community working together to learn the charts, generate profit, and achieve financial independence. Let's check out some charts. So in the video last week, I talked a little bit about the fundamentals around the sector and the potential to be watching for dilution and the early stages and my opinion on everything. So I'm going to skip that, not repeat myself, but go back and watch that other video if you want to see that aspect of things. We did see a little bit more dilution come out this past week, and we are watching volume really dry up, which is not surprising because we're in consolidation, and the bulls would certainly see volume dry up during consolidation. They would rather see that than, of course, increasing volume on a pullback. CMPS has a decent amount of volume on this drop right now, and it's coming from a double top at the all-time high. Essentially what happened here is we hit the all-time high, we traded sideways, no red flags during this consolidation. Here's the bulls' attempt to see continuation. They failed by about 1.5%, and then they rolled over and broke support. As soon as that happens, as soon as you reject from resistance and see a big red day the next day, that's your little red flag number one for the potential of a temporary top. And then as soon as you break $52 support, weekly consolidation is now underway, and we're pulling back and looking for a weekly higher low. We've seen a shift in dollar volume where CMPS, which is traded on the NASDAQ, is now our volume leader. Just looking at the last few days, MindMed was the volume leader because of this surge in bull volume on its all-time high run. But you can see, as I said, that volume has significantly disappeared. And if we just compare, yes, it's a holiday week, the past 2 weeks, and we have to keep that in mind. But as far as individual days, the highest volume in the last 4 days was 3.7 million compared to the climax, which was 26 million. Obviously, a very big difference. So CMPS, this pullback is fairly significant. We had the hourly time frame get oversold a couple times that led to some nice bounces. And again, back burner trades. Check out on YouTube, back burner chart guys, or Google, and find that trade because it oftentimes, especially in this market environment, great trade for probability. And it's essentially first hourly oversold conditions coming off the all-time high. So here we were dipping down to hourly oversold, and we bounced from 46 to 51, which is a nice 10% plus bounce. That being said, we faded back down towards 46, and now we just have a tightening range. I'm not going to use extended hours on for CMPS because the dollar volume is so insignificant trading in extended hours. The other names aren't trading in extended hours because of the exchanges that they are on. But if you look at the volume, we're talking less than 1,000 shares making these candles. So I want to know what the price action is doing when there's real volume at play. So we have a lower high at 51.50. That's a resistance level. We now have another lower high at 49.05. The best case for the bulls in the short term is to hold 46 and break 49.05, which would confirm an hourly trend change, which would then have us zoom out and scout a daily lower high compared to 60.87. What the bulls need for a weekly higher low to be set is a daily trend change back in their favor. And that's not going to happen in just 1 or 2 days. That has to develop. So let's just say the bulls change that hourly trend in their favor. We get a daily bounce. The bounce goes up to the mid-50s. It starts to create some space, and the space is needed for a daily higher low and higher high to confirm the daily trend change back to the bulls, which would confirm a weekly higher low being set. So again, that's going to take a while to develop. Hourly trend change first, scout the daily lower high. Is it a small bounce that favors a daily bear flag? Is it a big enough bounce that creates the space for the daily trend change? Those are the little clues that we're looking for, along with volume and some other indicators that are going to help us determine when weekly higher lows are set. So again, as I said last week, we are absolutely looking for weekly higher lows to be set in this sector. There's just no sign of it yet. So MindMed is number 2 in terms of volume at the moment. The best case scenario, a lot of names that we're about to look at look like this as far as the shape of their daily chart. And the best case for the bulls is to hold the low of December 22nd and then break the high of the bounce from there. And if we see a bull break of 420, which is that resistance, you could call that a little daily trend change with a higher low and higher high. And again, that would indicate our weekly higher low has been set. This is a weekly inside bar right now. There's another video out there on YouTube specific to inside bars. If you Google Chart Guys inside bars, this inside bar needs to break bullish for our weekly higher low to be set. That being said, we closed at the low of the week, and there's a base of support with a short-term battle between bulls and bears going on the last 4 days. And here on the Canadian ticker, it's at 385, and on the US ticker, it's on $3 flat. And all these names have US tickers being dual listed that we're going to look at. But on MMEDF, the base is at $3. If this short-term support level breaks, our focus immediately shifts to the low of December 22nd, and on the US side is December 23rd with the different holiday days. But again, we would have to hold 263, and on the US side, it's break 330 to set that weekly higher low. So there's 3 scenarios on how this could play out. Scenario number 1, daily trend change, weekly higher low set. Obviously, that's best case for the bulls. Scenario number 2, short-term support from the last few days breaks, but December 22nd, 23rd low support holds, and then we get a daily trend change. And scenario number 3 is lower high and lower low continues on the daily, and we break both of our short-term support levels, and that would mean keep an eye on the weekly EMA 12 support to come into play from there, because again, there's a lack of support established on the way up. The faster you run up, the harder you pull back because of the lack of support established. So after 263, if we're looking back at previous price levels, we're looking at 257 and then 213. There's a ton of space between each level that was established. So again, the weekly EMA 12, which I use on all time frames for trading, whether it's the 2-minute, 5-minute, hourly, that then becomes my visual guide as a target for the weekly higher low. So I personally have entered an initial position on MMEDF, and it was just a very small starter at, I forget, maybe 315 was my initial position, with the intention of adding 2 more positions. And I'm being very patient on adding those 2 positions because I know it's entirely possible we drop another 10 to 20% before we find that weekly higher low. And if we don't, and we see the bulls show up and change the daily trend, great. I'm making profit on my position, and my net worth goes up. If we break support, I've got 2 positions of capital that I will buy at. Let's just say for argument's sake, or for example's sake, that I have an entry at 315, I make a second entry at 270 playing off this support, and then I make a third entry after a bear break down at 220. My break even at that point, I'm not going to be able to do that math in my head, but 270, 220, 245, we're talking 263 would be my average or so, which is fairly comfortable. I would be fairly comfortable with that, knowing that we're looking for a weekly higher low. So red flags, increasing bear volume on bear breaks would be a red flag. That shows people exiting, obviously. I like the fact that MindMed has gotten so many rounds of dilution out of the way as far as news is concerned, because those are being priced in, and that means for me, if I were looking to scale into a weekly name that has not seen any dilution recently, then that's always overhanging over my head. And there's nothing saying MindMed can't do another round, but just the more rounds that we do, I feel like the more time we have before we get another one. So that's another reason that I'm choosing MindMed, but mostly it's the dollar volume. I personally have no interest in trading anything that does less than an average of a few million a day, and I don't like that we're dropping off so much here because it just means no day trading. And I was day trading back here when this volume was significant, and can't day trade in this tight a range with this lack of liquidity. I would like to be able to day trade because that's one way that I keep dropping my average. Let's say we go for an hourly oversold bounce and I flip it real quick for a 9-cent gain. That then drops my break even of my swing position 9 cents if it's the same size. So I like doing that a lot as far as managing my swing trades. So that's what we're watching on MindMed, and that's the same for a lot of other names that we're about to look at. So NUMI is a bit different. The pullback that we've seen here is a bit of a red flag. Look at the size, 245, and we've pulled back well over 50%. So obviously as bulls, you don't want to give back the majority of a bull move. 57% pullback. And if you compare it to RVV, which we're going to go over next, it's a very different story where the size of this pullback is only 38, 39%. That's a very big difference. So NUMI daily chart has already dropped to a lower low. And double check earnings. Again, I'm not really following earnings reports at this stage in the sector, but it's possible that earnings reaction. Oftentimes TradingView has the dates wrong, but it's possible that the earnings led to a bear break of that low of December 22nd. Again, the other names that we've looked at, or I should say MindMed, hasn't broken that low yet. So I've got a short-term resistance level of 134 that stands out to me. Short-term support is 102. And after 102, it's one psychological. And then weekly EMA 12 is right there. The size of the pullbacks already on these weekly time frames will have us looking for weekly lower highs to be the result of this bounce and then tightening ranges. And if you trade long enough, you know that after a big bull move up and then a sizable pullback is always the most likely scenario to find equilibriums. And all you got to do is look at other examples of stocks. And let's just look at PLTR on the daily chart. Big bull move to all-time highs, pullback of 30-35%. There's your equilibrium. This is a different time frame. It's on the daily chart, but you see it all over the place. And another example would be LAZR. Massive move up to all-time highs, massive pullback. There's your tightening daily range and tightening equilibrium. And both of those names are in completely different sectors. That's just how markets work as far as extreme euphoria, extreme fear, price discovery as volume drops off and ranges tighten during that price discovery. So we're watching for that on the weekly time frame. So my entries in MindMed are anticipating a weekly lower high. Now to see a higher high and just go straight, I know some bulls watching this are saying, nah, this sector is going up forever and it's going to change everything. And that's fine to have that belief. That just means that you haven't gone through enough of these sector, what are we going to call them? Boom and bust cycles in these sectors. But we would have to see massive increasing bull volume. It's a possibility, absolutely, but we would have to see this kind of volume return if we were going to see straight up continuation from here instead of tightening range. In the absence of massive bull volume, tightening weekly range is the most likely scenario. So NUMI, weaker. Already breaking the low December 22nd and watching little lower highs and lower lows. We had a little double top here at 195 and then a leg down on increasing bear volume. And the magnitude of that drop was magnified by that volume. And then another little double top and another little leg down. Not as significant, but bears still have complete short-term control. And we can watch the hourly downtrend as a guide. We've got a resistance at 120, another lower high at 113. Bulls would have to hold 102 and break those two resistance levels for a meaningful daily bounce to take place. RVV is a different story. We held the low of December 22nd and double bottomed at that level. That now becomes the most important short-term support level. And the way that I can trade around this is by using that level. Let's say I want to be real aggressive and I enter a full position at 60 cents. And I just say, all right, if 55 breaks, I exit my position, I eat that loss, and then I look to rebuy lower. When I have a clear level nearby that I'm playing off of, I can increase my capital that I'm putting at risk. And I can't do that comfortably for MindMed because, again, I'm not convinced 263 is going to hold, and I'm not basing my trade off the need that it must hold, which is why I'm reserving capital and being more conservative in case we see another leg down, whereas an aggressive trader would be completely based off of 55 cents and could use more capital because the risk is smaller because a stop out level is closer nearby. Anything under 72 cents is just a daily lower high. So it's possible we see this range on the daily just tighten up. If we fail on any bull follow through to start this coming week, if we fail 72, we're just going to look to tighten up, and then we're going to look to get a clear volume spike to break that tightening range sometime towards the end of this coming week. So Monday is going to be pretty important because if we get some bull follow through, it makes bulls more confident that that double bottom at 55 cents can hold. And again, the weekly consolidation here is still pretty darn healthy, especially when you compare it to a name like NUMI. RVV just did it, TRIP. So TRIP, now we're starting to get to a point where dollar volume is not enough for me to care about these names at all. Doesn't mean there's not money to be made on them. And back early in my trading career, I was trading penny stocks that had a ton of volatility, not that much liquidity. So I'm not saying don't do it. Just be aware that it's a completely different animal. And as soon as I upgraded to real stocks with real dollar volume, it was a game changer for me. And the last thing I want to do is go back to illiquidity. So similar setup where we have our low of December 22nd. We topped out on a bounce at 345, and now the bulls need to hold 25 and break 345 to shape up the weekly higher low being set. And again, due to the size of the pullback, we would then scout a weekly lower high compared to the 55-cent top, but one step at a time, scouting weekly higher lows and scouting daily trend changes to let us know that they have formed. Another thing to do is watch everybody in the sector. If one name changes its daily trend, RVV is a bit stronger. If it changes its daily trend, that increases the odds for me that MindMed is going to follow. If we start seeing more names break bearish like NUMI, that's going to increase odds that the sector is going to break bearish as a whole. There's definitely correlations going on. Some are stronger, some are weaker, but we want to be paying attention to what money is doing in all of these individual names and in CMPS as well, even though it's a different daily setup. Still looking for weekly higher lows there. So trip, trend change needed on the daily with a higher low compared to 25 cents and a bull break of 345 to set the weekly higher low. MYCO, same story. We are in a confirmed daily downtrend. There's not a ton of bear follow through, but we broke the low December 22nd, so the daily lower highs and lower lows continue. There's a pattern called a falling wedge to keep an eye on. Whenever you see bear breaks with a lack of follow through, you start scouting for the possibility that it is a falling wedge, because a falling wedge is essentially just bears getting tired. And this is actually how I would have drawn it. So we already would have broken bullish out of it, and now we need follow through over 475. So lower highs and lower lows. Next time we bounce on the daily, anything under 475 would just be a lower high, and the bulls are just hoping to shift momentum enough. Again, all names in the sector shift momentum enough to see a big enough daily bounce that a daily higher low and higher high can be the result of that bounce. If it's a weak bounce with no follow through, just like this one back here, there's a perfect example. Weak bounce with no follow through, continuation for the bears is likely. If this bounce had seen follow through, if there was a bit more bull volume here, again, the holiday is a factor, but if there was more bull volume and we got up to 53, the odds of being able to change the daily trend from there are much more likely than on this little bear flag bounce. SHRMF, again, this one has an asterisk next to it because its Canadian ticker is not trading, it's halted. 59 cents is a key short-term level. If that breaks, the daily downtrend continues. The bulls would have to hold 59 and break 80 here, just rounding a bit. But we would have to hold 59 and break 80 to shift this daily momentum and set the weekly higher low. If we see a bear break of that low of 59, the daily downtrend continues, and it's back to square one for the bulls to try and set up a daily trend change. CRLBF, that's not right. Who am I missing? Trip. Oh, I took pull off the list. Pull's dollar volume is under 100,000 now. So I'm not even going to cover anything that's that low. Friday's total dollar volume was $65,000 traded. So insignificant. Can't cover it. I will cover PSYC. Its volume is definitely a red flag as well. But just going to cover it because I know there's at least one member who is very interested in this play. But again, dollar volume traded, we're talking $20,000 traded. And that means one individual can significantly impact what the price action is doing. So short-term support here is 24. Bulls would have to hold 24 and break 30 to shift short-term momentum and set that weekly higher low. Again, everybody in the sector will be watching for weekly lower highs once we see this bounce. But as far as short-term is concerned, we're watching for daily trend changes to set weekly higher lows. So that's all we got for now. We'll check back in as things develop a little bit further. Have a game plan, bigger picture. Have a level where if it hits this level, you will sell your position. Because I cannot tell you how many messages that are heartbreaking that I have gotten from people from the MJ sector where they didn't have that and it significantly negatively impacted their financial lives. So just have a pull the plug level, and if that pull the plug level is really low, or ideally, you ride that bull move. Let's say I'm in at $2 and I sell half at $4, and now I'm riding free. And if it goes to zero, I don't lose $1. So that's ideally how you want to trade a hype sector if you do have goals and intentions to hold long term. Put yourself in at least a position as possible. I'm done talking. Have a good rest of your weekend, and we'll see you soon. Do good things.